Welcome to the Baldwin CPAs webcast, Paycheck Protection Program Emergency SBA 7A loans as established under the CARES Act, navigating the eligibility requirements and application process. The Coronavirus Aid Relief and Economic Security CARES Act allocated $350 billion to help businesses and nonprofit organizations keep workers employed amid the pandemic and economic downturn. Known as the Paycheck Protection Program, the Act expands the SBA 7A loan program, allows for 100% federal guarantees, and the opportunity to have loans forgiven if borrowers maintain their payroll during these trying times. The Baldwin CPAs team has studied the CARES Act in detail and will walk you through the eligibility requirements, as well as how to navigate the application process. Our presenters today are Lisa Foley, CPA, CGMA, and accountant Matthew McKirahan.
Thank you, Leslie. We're glad to have everyone with us today and to talk about this hot topic that's in our nation right now, kind of as an overview and to expand a little bit on what Leslie mentioned in the introduction. This SBA 7A loan program was signed into an act in the CARES Act a few weeks ago at this point, and allocated $349 billion to help businesses keep their workers employed. It's known as the Paycheck Protection Program. Some highlights of what that loan program looks like is that it is 100% federally guaranteed loan, and it is also 100% forgivable if employers and self-employed meet certain conditions in an 8-week period after the loan is funded. So we're going to walk you through that today and help guide you to make sure you can meet those conditions. If you don't spend it all, as we're going to talk about today, and there's a portion of the loan that does become unforgiven at the end of the 8-week period, it will become part of a 2-year loan with a 1% interest rate. So it's a very nice interest rate. A 2-year term. Hopefully everybody can be back on their feet in that time. So that kind of gives you a little bit of an overview, and we'll move right into who is eligible to look at applying for this program. It's a small business, a 501c3, which is a nonprofit, veteran organizations with fewer than 500 employees or otherwise meets the SBA size standard. And that has become very important this week as we've moved through this and learned additional information. There are some industries the SBA defines as small businesses a little bit differently. So 500 is the normal standard where they kind of break off, but for instance, we have an oil and gas client, and they actually could have up to 1,250 employees and still be considered an SBA and eligible for this loan. So just kind of keep in mind, we can always go and look to see if your business meets a different criteria, because it's the greater of the two. So if you have 500 or your industry says you can have more and still be considered a small business, then you may still qualify for this if you're over 500. So just keep that in mind. Second thing is it's an individual who operates as a sole proprietor or an independent contractor or is self-employed in a trade or business. They also qualify, and today is the first day the applications for that format can be applied for and accepted by the banks. So that's why we wanted to jump back on here today and update everybody with what we've learned through the last frantic week, and also just kind of get back in front of these people who fall into this new category where the applications are starting. Travel business concerns are also eligible. We have some, we don't have a lot of that in the Kentucky. It's mostly in the Western United States, but there are some in North Carolina and Tennessee, I think, that would have that. The eligibility rules. So some special caveats they did for the restaurant industry especially is that if, there are a lot of companies that may own multiple franchise locations. So as long as each franchise location doesn't have over 500 employees, you can apply. So they did make some special exceptions for that hotel and restaurant space to make sure as many of those businesses are covered as possible. And then, and that's just saying the second point there is that the affiliation rules don't apply to a franchise. So there are some affiliation rules. We've dealt with those this week. So if you've got some related companies, there's some steps you have to look through to see if you need to be looked at as an affiliated group. And if that pushes you over 500 and you don't meet one of these exceptions for restaurants and accommodation, then it's possible you might get thrown out in that regard. It's worth noting the 500 employee is not full-time equivalents. It's each person counts as a person. So if you have a lot of part-time employees, that can eat into your number pretty quick. So from the lender's perspective, as I mentioned, it is an SBA application, but this particular part of the stimulus package that they're doing is running directly through the bank. Some of the earlier ones in phase 2 of the packages, those are applied for directly through the SBA. So the lender is looking at, one of the things they have to confirm for your eligibility is that you were in operation before February 15th. So before really the start of the pandemic in the US, that you were up and running, because as we move into things, if they're going to base things on 19, and we'll talk about that in a minute, but if you did just open in the beginning of 2020 and you were in operation before February 15th, there are still some special ways to do your calculations so that you get that you can get eligible for this as well. So another way to prove that you were in existence is that you had employees before February 15th, or you had paid some independent contractors. And that's causing a little bit of confusion because there's been a little bit misconception out there that paying independent contractors increases your loan amount, but that is not true. I think that perspective here that we're saying is that's just one way to prove you were in existence at February 15th. So lenders, and this has been a little bit of a struggle for us in helping our clients because all of our clients are at different banks, and banks have been asking for their information in very different ways. We've tried to create a package that answers all the questions and should be facilitate the loan with any financial institution. But as the week has gone on, banks have developed some of their own paperwork, and we've kind of had to readjust and conform to that. But the one certification that's very important and is the first bullet point there is the loan request. You have to certify as the business representative that this loan is necessary to support your operations due to the uncertainty of the current conditions. I have not talked to one business that has any trouble signing that. So even though some businesses are still going and still have their people employed, they still aren't comfortable that all their accounts receivable will be collected, that their revenues aren't going to fall the longer this goes on. So all of those things, in our opinion and everyone I've talked with, equal uncertainty. So I think it's not really a very high bar to certify that. And if anybody has any questions about that, just let us know. But we have plenty of clients that are still doing work and still serving their customers, but they still have a lot of uncertainty of what this is going to look like as we move forward. Or, for instance, in a construction business, our contract's going to get dropped because other businesses have had uncertainty and are going to cancel some capital projects, even though they're okay right now. What's that going to look like in the coming time? So that's a pretty easy hurdle for us that we've been discussing with our clients. You have to certify that you will use the loan loan proceeds to retain your workers and payroll. As we get into it a little bit later, you can also use a portion of the loan to make your mortgage payments, lease payments, and utility payments. And we'll go in there. We've seen one this morning. We actually got our hands on a form that a bank has provided to help track this. So we'll talk a little bit more as we go along in the webinar. The last two bullet points is that you don't have another application pending for a loan that's for these same purposes. Do you have another application out there to help pay your payroll, pay your lease, pay your utilities? They don't want that. And there's been some confusion on that as well. And that really hasn't been completely cleared up because the first phase 2 of Congress's packages had the first SBA loan, the economic disaster loan. And if there was some thinking that if you applied for that, you couldn't apply for this, it appears they've kind of retracted from that. That loan, when you apply for it, needs to be for what they're kind of saying a different cost center. You know, is that loan for accounts payable? Is that loan for materials? It really, you can't say that that loan is to cover these expenses because that would be duplicative. So something we have also learned, and there's some misconceptions out there in the space, is lenders are not looking for these three things. So there was a misconception out there that if you could only get this, if you could not go to the bank and borrow money on your own. And that is entirely not true. That is not in the bill in any format. So you do not have to have the ability to get credit elsewhere. If you have that ability, that does not throw you out from this process. The couple very attractive things, lenders are not looking for owners to personally guarantee this loan. As we mentioned earlier, it is 100% federally guaranteed loan. So there is no personal guarantee, and that is very different from the economic disaster loan, emergency disaster loan that came out in phase 2, because that does require a personal guarantee. And it also requires the SBA will want to take collateral on real estate or some type of property. Whereas this Paycheck Protection loan, they will not ask for that guarantee, and they will not ask to take any collateral. All right, so we're going to move into now is how do you make this calculation? And Matt, I think I'm going to turn that over to you, and you can kind of walk us through that.
Thank you, Lisa. Appreciate that. Appreciate the information you've gone over so far. And so I guess we'll jump right in here. And how much can I borrow? And so the loans can be up to 2.5 times the borrower's average monthly payroll costs. And so we'll define payroll costs here a little bit later, but is incurred during the 1-year period before the date on which the loan is made. And there's a little bit of confusion on the timing of that 1-year period. At first, the Act stated that it needed to be the prior 12 months of the day of you getting the loan applied for. And so, but they've actually come back, and due to being able to look at 941s and W-3s and 1099s and tax returns that we'll talk about here in a little bit for sole proprietors and things of that nature, the December 31st, 2019 year end is what they're going to go off of. So we can use 2019 as our 1-year period. Loans cannot exceed 10 million. It's capped. And then so we get down to kind of our calculation here. And so how do I calculate my average monthly payroll costs? And so you're going to take of the sum of all included payroll costs, and we'll kind of break that down here in a minute, less your sum of excluded payroll costs. And there's a definition of excluded payroll costs as well, and that is mainly the $100,000 cap. So if you have been paid on your W-2 more than $100,000, we will automatically have to lower that amount to exactly $100,000. Same if you're looking at a Schedule C. If your Schedule C has been paid and you have net income over $100,000, we would have to cap that back to $100,000 as well. So you take the sum of included payroll costs minus your sum of excluded payroll costs, and you get your actual payroll cost, which is going to be then multiplied by the 2.5 times the borrower's average monthly payroll costs. And so let's go a little bit into what is included in payroll costs. So for employers, the sum of any payments of any compensation with respect to employees that is a salary or wage, W-2 or things of that nature. If you have cash tips or equivalents, those are also included in your payroll costs. Payment for vacation, parental, family, medical, or sick leave is also included. And just a little bit of a detail there. That amount can be also included in your salary and wage. And we've actually created a spreadsheet to help our clients go through this and calculate. And so there was a little bit of misconception at first. Do we need to split that out? Do we need to combine it? And so the banks have been very diligent with us and working with us to be able to create just one column for those two things, the salary and wages, and then the vacation and parental family pay as well. Allowance for dismissals or separations are also included. One thing that is important to note here is that group healthcare benefits that are paid on the employer's half or the sole proprietor's half is also included. So we get to add that into our payroll costs. And then if you have an employer 401k match or retirement benefits, those are also included in your payroll costs. And the last one there, payment of state or local tax assessed on the compensation of the employee. That can be a little bit confusing when you read that, but that has been defined as basically the employer part of state unemployment insurance. So those are things that are included. And moving over here to what would be included for sole proprietors, independent contractors, and self-employed individuals. The sum of payments or any compensation to or income of a sole proprietor or independent contractor that is a wage, commission, income, net earnings from self-employment, or similar compensation that is obviously not over the $100,000 cap. And so we've seen a lot of these for sole proprietors and things of that nature that have businesses that are going on Schedule Cs. And so the banks are diligently allowing us to basically look at your Schedule C, get your net income for 2019, divide that by 12 to get a monthly average net income, and then you multiply that by that 2.5 factor from the SBA to get the amount of loan that you can get, the max amount that is. So some of the things that are excluded from payroll costs, we've talked about the $100,000 cap and that limit there. Payroll taxes, railroad retirement taxes, and income taxes are excluded as well. Any compensation of an employee whose principal residence is outside of the United States would be excluded. And then the Family's First Coronavirus Response Act that helps with the 2-week emergency paid leave, and then the 10-week Family Medical Leave Act as well. Those wages, if you're paying for those, are not included in the actual payroll costs for this calculation for this 7A SBA loan. So let's look a little bit at an example. This is a snippet of our spreadsheet that we have created here internally at Baldwin to help our clients. And so just using the example of John Smith here, he's an employee. He has a W-2 and it was $150,000 for last year in 2019. Working from left to right, you can see that due that he's over the $100,000 cap, we have to lower his amount by $50,000 to get him back to that $100,000 cap. One thing to note is you're not capping your total payroll costs. You're only capping the wage amount or what you've earned. And so if this was a sole proprietor or a Schedule C individual, say they were $150,000 here, we wouldn't have to cap at the end after you add in health insurance and retirement benefits. You're only capping that net income portion for that Schedule C individual. And so after the less excluded payroll costs, you can add in their $18,000 of healthcare benefits that the employer paid for, and then you're adding the 401k match of $5,000, and then you're also adding the state unemployment that was paid on behalf of the employee. That's the $950. So all that together, you're going to get into a total included payroll cost and a total cost per employee. You would do this for all your employees if you're an employer, and you would come down to a net payroll cost. Or if it's yourself on a Schedule C, it would be pretty simple as well. You're just taking your yearly Schedule C net income, and then you can see at the bottom right-hand corner there, you're going to divide by 12 to get an average monthly payroll or average monthly net income for sole proprietors. And you would multiply that by the 2.5 times the SBA factor there and get a maximum loan amount. So that's kind of an example of what's going through. Like Lisa said, we've gone through a lot of these here at Baldwin, and so we'd be glad to help you with these calculations, send you the spreadsheet to help you go through this and get that information put together and accumulated onto one sheet. But with that being said, that's kind of how you go and calculate your loan amount. And I'm going to hand it back over to Lisa to talk a little bit about loan forgiveness and how once you get your max amount of loan, what you need to do with those proceeds in order to get it forgiven.
Thanks, Matt. Good detail information there. So the part that's really attractive to all of our clients and employers is the forgiveness amount. So right now we have one client who actually has the check in hand from the bank. We filed a lot of applications. We got them into the banks last Thursday and Friday. I know the banks worked all weekend, and as did we, getting them more applications. So a lot of the applications have been uploaded. Once the SBA site was quit crashing, let's say, from all the heavy traffic, those approvals have been coming back really quick. So what I would like to say is, like, so when it goes to the SBA approves it, it's coming back to the bank, and the bank then has to create additional closing documents. So the thing we've been helping our clients with is the application that the bank needs to submit it to the SBA. Once the SBA approves the application, it's coming back, and technically you're doing a complete closing package with the bank to close on the loan and get the check. So I just wanted to kind of tell that process, because what happens is once you get the check, that is when the clock starts on your 8-week period to figure your forgiveness. So when a loan is originated, when you get the check, basically from that point, you're going to have to track what you spend on payroll, interest. I think if we go on to the next page, I think we've got the rest of it. So it's payroll, interest, rent, utilities, and for tipped employees, you can count the tips as well. So just kind of keep in mind all the costs that Matt just went over in that spreadsheet. You get to count those as your payroll cost on the back end, tracking it. We have seen a spreadsheet this morning from one bank kind of helping do that. I really expect that we're going to get some more guidance coming forward of what this looks like. You know, I think the SBA has had to move so fast. The lenders have had to move so fast. Applicants and clients have had to move fast. So we're having to take guidance as it comes. And what I have told people is, you know, let's get you applied and get you in line for the money, and we'll figure out the forgiveness, and we'll have the 8 weeks to plan and figure out how we can make this forgivable for everybody. That's just going to take some effort. And Matt and I have kind of really been putting our heads together on how we're going to help our clients through that process to make sure, you know, they get the full benefit of this being forgivable. But basically it's going to be tracking that. We've had some clients talk about, you know, setting up a separate account, and some people are encouraging that. I don't think it's technically necessary. I think we just have to be able to prove the expenses on the back end, and we just don't know exactly what that looks like yet. But definitely putting it in a separate account and only paying these type items out of it would be one way to track it. But if you have a good accounting system, tracking the expenses for these items should not be that difficult. So I don't care if my clients are getting a separate account. I feel comfortable if they have a good accounting system, we will be able to compile these numbers when we get to the end of the 8-week period. But just important to know that that's when the 8-week period starts. So a part that's a little bit fuzzy, we believe it's an either or. Spend the money, and when we're talking about spending the money, it is 75% of it has to be spent on payroll, and only 25% of it can be spent on those other items of mortgage interest, lease payments, utilities. So that's the split. But then there's also, prove to me that you've got the same type number of people that you had before this happened. So these are some calculations that have been put out there. We've not seen anything really in strict guidance on this yet. Again, I think that will be coming, and we'll probably be doing some more updates, and I would imagine we will have a webinar in the future to kind of walk everybody through this. But basically is taking your payroll costs that we had already calculated and the average numbers of FTEs for those 8 weeks and figuring if your FTEs are about the same. There's just really not a clear calculation. It's going to be a little bit different for seasonal people. We haven't talked about that yet today, and we've had a few clients that have fallen under that. If you are a seasonal employer, you only have to base your payroll cost and also your number of employees based off of February 15th to June 30th of 19. So they have defined the seasonal time, so you do not get to pick and choose your seasonal time. But if you consider yourself seasonal and your payroll average would be more from February to June, I think you can choose February 15th or you can choose March 1st. Those are the two choices. If that yields a higher monthly payroll for you, you can definitely choose that. So we're still working through the support of what this is going to look like, but that's kind of what we know right now. There is also, and I think it's on the next screen, Matt, this is one that we're really interested to see if we get some more guidance on, especially for our restaurant clients, because the problem for our restaurant clients right now is they are forced to be closed, or salon clients are forced to be closed. They can't open. So if they get their money this week or next week, how are they going to do that? Are they going to bring their employees back off of unemployment and pay them with this money to use it for payroll? Or is this going to be, if you read this screen, it talks about that if you get your employees back up by June 30th to the numbers it was compared to February 15th before this happened, that they're going to forgive it. So we have not seen really good clarification if this trumps the spending calculation that we just talked about. Matt, I don't know if you want to share any more on that, but that's kind of where we're at right now, I think.
No, Lisa, that is correct. We have not seen a definitive answer on whether it is one trumps the other or not. But one thing that we have been telling our clients is go ahead and apply, get the money, and then we can maneuver around and spend it or not spend it based on and what we need to. And then when it comes back to the end of the 8-week period, if we've not used it and we're still holding on to it, we can just get it back. But at this time, we're definitely just helping our clients get that money up front to be able to at least have it and be able to use it if needed. And then we'll figure out this as soon as we get some more clarified guidance.
And I think the next slide, which I think is the last slide before we can go into some questions and some things that Matt and I can just talk about that we've lived through in the last week and a half, 2 weeks. It's very important in choosing your bank, choosing your financial institution. Some have been easier to work with than others. I will just say that. And if you are a current customer of a bank and already have a relationship, those banks tend to work better with you. And some banks have went as far as to say, we're only going to service our customers that had a current relationship with us, which is really causing some heartburn in Washington. Because for some perspective, not all banks are SBA approved. And so all banks cannot do this. I know here in Richmond, I know of at least 3 banks that got SBA approved in a week so that they could do this and help their customers. But it's not a very easy process. We've been lucky enough to have a couple banks that have agreed to work with us and let us send customers to them that are not current relationships. So, picking your bank could be really important. And when this program first came out a week or so ago, everybody was worried they were going to run out of money. I tried last night to look and see if there was any report of how much of this had been lent out or approved at this point. And I couldn't find any good solid numbers. But what we have learned in the last week and a half is it has been less about running out of the $349 billion. It's been less about that and more about banks having enough capital and liquidity to lend these huge amounts of money. We're running into where banks are internally setting some limits, like we can only make $20 million of these loans, for instance. And when they hit that limit, they just really can't do anything. And in the process of this act being passed, I had some conversations with some clients that were working with people in Washington on writing this, and there was a lot of concern about that. So if you really study the bill, I was pretty impressed that they had the foresight to think about that, because if you go back and look at the bill, it actually lowered some standards. There were some big standards coming along for financial institutions that were really making them be able to lend less. Those were some accounting standards. It was changing the way they had to account for things. And to facilitate this lending process, the bill and the act actually pushed those accounting standards off to kind of help with this process. But we have seen some banks say we're getting close to doing all we can do. In Washington, the Secretary of Treasury has been promoting that we've got to get more banks signed up. You know, some of your small community banks are not set up to be SBA lenders. It's really has been focused more in the bigger banks. So there is some concern that the money is not getting to the right people because they don't have the avenues to do it. So I think and the Secretary of Treasury has also said that he'll go back and get more money. As I understand it, they tried to go back to Congress yesterday, and unfortunately things are trying to get tacked on. And I think it was a big mess this week when they've tried to do that. They have said that they will add more if it's needed, but that has not happened yet. So first come, first serve in a lot of different ways. So I think everybody's got to think about that. I know most of our clients have really been under the gun to get this in and have that in, but I also feel confident if they're going to say sole proprietors can't apply until today, and the business clients and corporations and LLCs that aren't sole proprietors had a week ahead, that seems very unfair to the last people not to get the same opportunity. So hopefully we'll see some news in that realm to make that right. Another thing in banking, some banks have developed an online process, and some banks are just letting you send the paper, the manual application, and they're inputting it to the SBA. So we have a lot of clients who just aren't really comfortable with that online process, and that's made it very hard. Chase is a fully online process. Matt, any more that you think of? I think it's maybe PNC fully online process.
Yes, that is correct as well.
Yeah, so we've just had some clients that haven't been very comfortable with that, and then we're kind of scrambling to try to see if we can get a community bank, a smaller bank that's more relationship driven to be able to help them. And that's been a little bit of a process. So those are some things you've got to think about. You know, once we worked through the Chase process, Chase was very slow to the game because they were developing their online process, but I think it went pretty well. I know Matt helped our client with that.
Yeah, they were definitely right in line with what the act has actually stated. I know a lot of banks sometimes get caught up in the red tape and getting the supporting documents that we're talking about, and we can give some examples of those. But Chase, once they had gotten their online thing running and running smoothly, I mean, they're right in line with what the act talked about, being quick, relying on the borrower's calculation because they are not being held, the lenders are not being held liable for those calculations. We want to make sure they're accurate and make sure they're correct. But that being said, in order to speed up the process of getting you the money when you need it quicker, Chase has definitely taken the approach of less is more. And so I know for when I walked through the one client yesterday, the supporting documents, they only asked for one thing. It was an employer, and we only had to submit the W-3, and that was it. And so they have definitely taken the approach of less is more and really trying to get the money into the right hands at the right time.
Yeah, and that the supporting documents has been a little bit of struggle. The banks are so used to Dodd-Frank Act and all this regulation and all this paperwork and stacks of file fluff to create a loan. And then the SBAs came along and said, no, keep it simple, get the money in the hands quick. That's the goal of this. So banks have been, it's been across the board what they're requiring. They really aren't required to ask for much according to the bill, but some of them have taken it upon themselves to put some more stuff in there. So a lot of them are asking for 941s for the whole year to support your calculation, a payroll register that shows the detail, gross pay to net pay. We've seen some things requiring a copy of your corporate tax return. We've even had some banks that have asked for payroll registers for 2020, which that doesn't even figure into the number. So that's the part that's been a little bit frustrating from us in a support role, is giving the information the bill requires and then having to keep going back and forth to facilitate the process with different banks because their requirements are a little bit different. And in their defense, you know, if the loan is not forgiven, it becomes a 2-year loan at 1% interest rate. So they are going to be stuck with this loan on their bank books for 2 years on the part that doesn't get forgiven. So they're going to have to kind of monitor that. And so they're trying to cover their bases in that. Because the misnomer that's out there is that the Fed's given this money. And like I was talking about the lending limits earlier, the banks are not getting funded this money to make these loans. They are having to make that out of their own current capital. They will only get repaid for the loan after the forgiveness period. So that, I think people aren't understanding that. So that really has put banks in a hard spot. I read an article this week that said they are trying to set up a secondary market where the banks can then sell these loans off, free up the capital, sell them off to the feds, and then free the capital to be able to keep lending to people for this program. But they want to get that up and running. It's not there yet. So with everything, it kind of takes time. So in the last item there, we've really talked about first come, first serve in this bank environment, but we've talked about when your 8-week period starts. But, you know, that's really kind of critical. You know, if we feel comfortable that the banks are still there to lend money, and we feel comfortable that the $359 billion or $349 billion is enough, or they'll add to it, some clients that are in industries that have been forced to shut down might want to really think about, is it worth putting my application in a little bit later so my 8-week period starts later? I really hope they'll come up with something that gives a little reprieve, that if you are mandated to be closed by the state, should your 8-week period really start? And that's just, we're going to have to kind of wait and see what that looks like. But if you can play with your 8-week period some and feel comfortable taking that chance, that might work out better for you and your employees until you can get reopened. And then let's see. I think anything else, Matt, you can think of that was odd things that we've ran across this week, or things we've had to kind of juggle that we need to make people aware of?
No, I think we've covered a lot of our bases here. Like I said, it is very fluid, very flexible. Like Lisa had mentioned, banks are asking for different things, and so being able to have those conversations with the banker, if you've already got the relationship, that's a starting point. A great starting point is to go ahead and call your lender and make sure you've been touching base with them. They understand that you want to apply for this, and you walk hand in hand of what is needed, because that seems to help the process quicken as you go through it. And so,
and one thing I guess we should mention, Matt, is once they get SBA approval, once the application is uploaded and it's approved by the SBA, the bank has 10 days to close the loan. They have to get it closed within 10 days. So they are definitely under the gun where they worked really hard to process as many as possible. They've got 10 days to get that money out. So that's the new time crunch that the banks are working under.
Yeah, and they obviously didn't know that until a couple days ago. So they have definitely been scrambling. With that being said, I know we got some time for questions. So I see we have about 20 participants. If you've got the availability to go ahead and ask a question, please feel free to do that in the chat. I do see a couple on here, so Lisa, we can definitely respond to these.
Sure.
I'll read the question and then we can kind of go through and answer it here. First question here. It looks like we have a salon owner and all their employees are 1099 contractors. The 1099 contractors pay the owner weekly rent. Since COVID-19, I've had zero income from that. Does this new law today qualify me for the PPP loan?
So the salon owner would not qualify for the PPP loan because they don't have any payroll. The booth renters, the subcontractors, they would file on their own for the PPP loan. The salon owner, really the benefit for them is to go do the economic injury loan. And there's a place in there to put lost rents due to this disaster. And that's really the loan you qualify. But what I will say about that loan is a 30-year loan with, I believe, a max of 4% interest, and they will want to take collateral and have a personal guarantee. So it is not a forgivable format. There is also a disaster loan of $10,000 out there that the salon owner would probably qualify for, and that $10,000 even is forgivable. And I've really honestly not seen what you have to go through to prove the forgiveness on that one. But I've heard a lot of people talking about going for that one in certain situations. For our benefit, most of our clients, it has been higher than the $10,000 to go the PPP route. And so we've really been focusing on trying to get the most bang for our buck and helping the client the most. So that's what we've really focused on this last week. But Matt and I definitely have some client requests in to study the disaster loan as well as the $10,000 portion of disaster loan and see if that's going to fit for some of our clients, because we have a lot of clients that are just in that rental space similar to that, that we need to check on. But you do have to know if it goes above the $10,000, it is going to be truly a loan without forgiveness. It's a great rate and a great term, but you will be coming out of this with some long-term debt if you go that route. And both of those loans are applied for directly with the SBA, not through, you will get kicked out to a lender at some point. I've had a couple clients file. I know of no one who's got a $10,000 check yet, nor do I have any clients, and some of these were filed over 2 weeks ago, that have been contacted yet by a lender or the SBA. So I think all hands on deck are focusing on the PPP program, and I'm not sure how much the other loans are getting looked at this point, unfortunately.
All right.
Matt, does that sound, did I cover everything on that, or you miss anything you can think of?
No, I think you covered that, all the basis on that question for sure. Next question here, it says, I have submitted my initial application to US Bank, which is the bank that the client is using. I was told I would receive a link to upload the forms yesterday, but they have not received that. I'm getting a little anxious. Can you provide some insight as to timing with banks?
It's kind of been all over the board depending on the bank. I will say I have a couple people with US Bank, and I've not heard where they're at in the process. We kind of provided them the information and they kind of went there on their own. But I have some applications we turned in last Saturday, and I was talking with some bankers yesterday, still trying to get things uploaded. On the flip side, we turned in some applications on Saturday and Sunday, and everybody had numbers Monday and Tuesday at banks. So it just really depends on the bank and really how prepared and how much manpower they've put on it. But I will say if US Bank is more of an upload process, creating an online portal to support the process, that did get a slower start. I think it may be more effective in the long run, but I think it definitely, I mean, Chase just opened up 2 or 3 days ago, Matt, is that right?
That is correct. I believe it was early Tuesday.
Yeah. And then the flip side of it is that I think we're going to run into is, some of the banks that have worked with us to take on non-customers of theirs that we've gotten everything ready for them, they're setting kind of a limit. Like they don't want, if it's not an application over $25,000, they're not willing to take that on. The banks, obviously the interest rate, the banks aren't going to make any money off a 1% interest loan. So the banks are making their money in the bill. They get paid a loan fee from the SBA to process the loan. So, if it's a $5,000 loan and a $10,000 loan, which can be very important for sole proprietors and small businesses, but I think we're going to have a hard time with banks facilitating those loans because they are going to get paid so little to do those, and it's not worth or the best use of their time. So I'm afraid those smaller applications are really going to have to focus on some online avenues. I know we've seen, there's a company out of Atlanta called Cabbage.com that has set up processing online to be that conduit, and I don't think that they have any limits on the amount. And then also I had read earlier this week that QuickBooks Online Intuit is going to facilitate some loans for small businesses too. So the smaller your application is, I think you're going to get less attention from some of the community banks. I'm not saying that's true, and nobody's told me that, but that would be my impression, Matt. I don't know if you agree, disagree.
No, I would agree. I'm glad you mentioned the Cabbage Avenue. They have obviously come out and said, send us all that we can handle, basically, is what they're basically saying. And so would be a great online avenue. I know they're not requiring much supporting documentation as well. They really kind of align themselves with what the actual CARES Act states. And so that could be a great avenue for some of our smaller applications that we're going to be going through. All right. I do see Darren on here. If you do have any questions or want to reach out to Lisa and I, don't hesitate to give us a call today. I just wanted to mention that. And then, so I see about a 4-part question here. So I'm going to try to do my best to read through this, Lisa, and we'll try to tackle it one at a time. It says, for LLCs with no employees but multiple owners, can they apply? I guess we'll stop there.
So there's been a little bit of confusion. I think, okay, I've seen a couple things. So first, depends on how the LLC owners have been paid. I've not seen official guidance because I don't think it was in the final guidance, Matt, and you can correct me if I'm not thinking right. But there's been some question about whether guaranteed payments to a partner count as payroll. We have not taken that approach. I have seen some Q&A, but it's not been official Q&A that says some people think it does count. I think the safer route is for the partner to file individually on self-employed income and prove their net self-employment earnings off their SE schedule off their 1040. And so if you're making 100,000 or you're making more than 100,000, it's still going to be capped, at the 100,000. So everybody will be getting, in that $20,000 range when you back that off. But I think that's on an individual level, Matt. I think you and I've kind of talked about that.
Yeah, no, I agree 100% that they would need to go do it on their own, not through the business. And so that kind of helps alleviate some of how they're getting paid, because we obviously don't know that situation, but there are a lot of different ways that the members can be paid. And so, but yeah, I know I agree 100% with taking the individual amounts and having them go do their own application. So it goes on a little bit here to give a little bit more detail, talking about the average income. I know we talked about the $100,000 cap. And then so if you're taking that approach and it's $240,000 net income amongst the 3 members, obviously they would each have their own portion. That's obviously going to be under the $100,000 cap. And so you would take your portion, divide it by 12 to get your monthly average, and then multiply that by 2.5 times to get your individual member loan amount. And then the question on here, can they add the FICA taxes of both the employee and employer?
We've lived that this week. No, the employee's FICA tax is already in the gross pay amount from an employee standpoint. So you're really already covering that part because it's in their gross pay. The employer taxes, if we think back to that excluded screen where it said, income, federal and taxes, the employer part is not part of your payroll cost. I get it. I know that's part, truly, as a business owner, that is part of our cost of payroll, but that has not been accounted for in the act to do that. And there's been great confusion. I know ADP sent out reports to a lot of their customers. They built a special report that says, here's your average payroll cost, and they had added it. But I also saw an email from ADP yesterday that said, oh, that was wrong. We've gotten further guidance. That should not be included. So the bills are written, they're pretty short and concise, really. So everybody can have their interpretation of what they meant. But I will say the Secretary of Treasury has been good at coming back and saying, no, that was not the intent, and kind of giving us guidance. But the fast-paced nature of it has made it hard. There are some applications. There was, the first guidance acted like you had to subtract the FICA and federal off. So we filed some applications that way on that guidance, and then it was clarified, I think, Sunday morning to take that off, and some things had already been uploaded. So there is we've not heard any guidance on if you can correct it after they issued, clarifying guidance. So we're kind of waiting on that as well to see, but they have definitely come out and solidly said the employer portion is not supposed to be added.
All right, looks like we got one more question on here. It says, can you elaborate some more on filing an application as a sole proprietor? And obviously that's effective today. Filing one as a self-employed individual for the same company. So I guess I'll start with this a little bit. And so you kind of have to do a cost-benefit analysis here. So if you're a sole proprietor and you have payroll, you're going to want to look at 2 real different avenues. And Lisa, you can tell me if I'm wrong, but can that individual also do the company with the payroll and then also themselves for the Schedule C?
I think so. I think that's what we had read, that you could file 2 applications, because your EIN can really only file 1 application. If you are an employer, you have an EIN number. And then I think you would file on your payroll. And we have done that for some clients. And now, as of today, you can also file as a self-employed person, which would just be on the net income of the Schedule C. And I feel like that application would be done in your personal Social Security and your name, is how I would look at that. And I think we maybe saw a Q&A on that, Matt, that you could file 2 applications in that format. Do you remember us talking about?
I did. I think it was Wednesday night, the latest one that had came out. And so, no, I agree wholeheartedly that you'd be able to do both. One for the business under the EIN, and then one for your social as a self-employed individual. And
we have not put any of those social ones through yet. So we haven't lived that or had any feedback from the bank or the SBA. So that's just kind of our gut. We were wondering if we would get more guidance, since they said, okay, self-employed people can't file until April 10th. But actually nothing more has come out this week really given any more clear guidance on that. So that's kind of the approach we've taken of what that probably should look like.
Late question here, where can I get the latest application form? So we actually have a fillable version here at Baldwin. The form is the same for sole proprietors, self-employed, and businesses. There's just a box at the top that allows you to check what you're filing as. And so we do have a application form fillable here. And so if you want to shoot either Lisa or I an email, we can send that out to you. And that's a fillable version. So it should be able to help you go ahead and fill that out. And obviously we can help you as well.
And I think they do have, I think you could probably also find it, they should have it on the SBA website.
That is correct, yeah. And I believe I think there's a link, if not already, there will be a link on our website that you can just go straight to the SBA site and pull that down as well. All right, I know we're coming up on our hour here, and so I don't see any more questions. Lisa, is there anything else you want to add before we jump off here?
I don't think so. We appreciate everybody's time, and we hope the presentation was helpful. And I know Matt and I kind of joked we were running a little bit on fumes today. We're used to tax season, and that's fine, but we haven't touched a tax return, I don't think, in a week and a half. But this has been the most pressing matter to help our clients and help them through this time. So if you need help, have questions, please reach out to us. We have literally lived this for about 2 weeks now, and feel like we're on top of it and can help you. We've lived through the trials and tribulations, so I think we can definitely help guide you.
Well, good deal. Appreciate all the feedback. I'm seeing some feedback on here, and so please reach out to us if you have any questions, and we hope you have a great rest of your day, and we'll talk to you soon.
Thank you.